Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today's Friday, and happy Friday to all of you out there. Hope you all have a good weekend coming up. Today's October 8th, and the news week we've been waiting for all week is today. We got the non-farm payrolls coming at actually negative 95,000. So we have more state and local level government jobs actually cutting back on people and more than what the private entities can even bring in. As we can see, private payrolls were 64,000, so that improved a little bit. So, but unfortunately, even the local and state government levels were having a lot of cutbacks on there. The unemployment remained the same, even though they expected to go upwards. Our average hour earnings didn't go up as much as they thought. It actually pulled back a little bit. We're down to 0.1%, where the prior month was 0.3. Wholesale levels are up, but about half the level they were before. So nothing's moving on the wholesale level. But the stock market's up. Why? Because there's thinking that the Fed is going to do some quantitative easing anytime soon because these job numbers just too much of a concern, and that the stock market's been up a bit today regards because they're kind of building in pricing for the what the Fed's gonna next move will be regards to they think there's gonna be some quantitative easing, and that what that basically means that they're gonna be putting money, pushing pumping money into the economy. So we'll see how they're going to go about doing that. If that when they're going to do that. So it's more when than if. So as we can see, these numbers aren't looking so good. So let's take a look here. Now, as a result, the bond market was sky high. I mean, we started off quite a bit from yesterday's close. We have a big gap there. We had another gap before the week before. So we had a bit of a gap here. We have a gap here. We were way up here. We were touching 104 earlier this morning, just a few minutes ago, actually, and it pulled back down here to about 103.84 level. So these are about the highest levels I've seen this. I don't. Before we were about the 103, maybe in this range of 103.60 at the max we saw. Now rates are probably at the very best levels we've seen in quite some time with this levels here. Now, if it's going to be sustained, I don't know. We have a lot of room to pull back, as we can see the 10-day moving average is here. We got this trend line will be kind of moving up here, so it's coming up. The trend line as well as the 10-day moving average is going to have to do some correction here at some point. So, anyways, if anything else changes, I'll keep you up to date. But rates are at an all-time high right now. At least for quite some time. You guys have a great day.